If you've been thinking about investing in 2025, chances are you've heard the buzzwords, index funds and ETFs. But which one is better for you? Today we're diving deep, but don't worry, we'll keep it simple. We'll break down what each one means in plain English, compare them side by side, and help you figure out which one fits your goals. And stick with me to the end. I'll share my personal pick for 2025 and why it might surprise you. What's an index fund? Imagine a giant shopping basket. Instead of holding groceries, it holds tiny pieces of hundreds or even thousands of companies. That's basically what an index fund is. It's a type of mutual fund designed to match the performance of a specific index, like the S&P 500. So if the S&P 500 goes up 10%, your index fund goes up about the same amount. They're passive investments, meaning the fund isn't trying to beat the market, just match it. Why do people love them? Simplicity: you buy once and you instantly own a big chunk of the market. Low fees, because there's no expensive team picking stocks. Steady growth: historically, broad index funds have delivered solid returns over time. Quick question: have you ever invested in an index fund before? Drop a yes or not yet in the comments, I'm curious. What's an ETF? Now let's talk ETFs, short for exchange traded funds. They are very similar to index funds in that they can track an index, but here's the twist. ETFs trade on the stock market just like individual stocks. That means you can buy and sell them throughout the day, and their prices change minute by minute. ETFs can track anything: the S&P 500, bonds, commodities, even niche sectors like clean energy or gaming. People love ETFs because flexibility: you can trade them whenever markets are open. Variety: there's an ETF for almost anything you can think of. Tax efficiency: they're usually more tax-friendly than mutual funds. If you could create your own ETF, what would it focus on? Tech? Coffee shops? Space travel? Tell me in the comments. I might read some out in my next video. The similarities. Before we start picking favorites, let's see where they are the same. Both can give you instant diversification, spreading your money across many companies. Both are low-cost ways to invest compared to picking individual stocks. Both often track indexes and require very little maintenance. In short, they're both great for long-term investors who want to grow their wealth without constantly staring at charts. The differences. Here's where things get interesting: the differences. 1. How you buy them. Index funds: you buy them directly from the fund company at the end of day price. ETFs: you buy them through a brokerage account and you can trade anytime during market hours. 2. Minimum investment. Index funds sometimes require a few hundred or $1,000s to start. ETFs: you can buy as little as one share. 3. Costs. Both are low cost, but ETFs often have a slight edge. 4. Taxes. ETFs tend to be more tax efficient because of how they're structured. 5. Flexibility. ETFs give you real-time trading, index funds don't. Which one should you choose in 2025? So, which one's better in 2025? Here's my take. If you like set it and forget it investing and you don't care about buying or selling during the day, an index fund is perfect. But if you want flexibility, the ability to trade in real time, and a wider range of options, ETFs are the winner. Personally, I like ETFs for their versatility, but I also hold index funds for my retirement accounts. The truth is, you don't have to pick just one. Many investors use both. Which camp are you in? #Team Index or #Team ETF? Comment below and let's see who wins this year's showdown. Before you rush to invest, here are some quick tips. 1. Start small. You don't need thousands to begin. 2. Use a reputable broker or fund provider, safety first. 3. Think long-term. Both ETFs and index funds shine over years, not days. 4. Avoid chasing trends. Stick to broad, well-known indexes for stability. 5. Automate your investing. Make it a habit, not a one-time thing. Alright, that's our index funds versus ETFs, the 2025 showdown. Whether you're hash team index or hash team ETF, the key is to start, because time in the market beats timing the market every time. If you learned something new today, smash that like button, share this video with a friend who's thinking about investing, and drop a comment with your choice. And if you want more easy-to-understand investing tips, hit subscribe and turn on notifications, because your journey to financial freedom starts right here.